Merci beaucoup. It's un plaisir d'être retour en France de façon virtuelle. Great to be here with all of you today. As mentioned, my name is Henri Arslanian, and really my passion and my focus in life is the future of the financial industry. I'm very excited to be able to share with you all today some of the latest developments that we have in the broader central bank digital currency space. And really my goal over the next couple of minutes is to share with you some of the latest trends that we are seeing around the world and hopefully empower you with this information and let you make your own decision on what you think the impact will be on not only the future of the crypto industry, but also the future of financial services. Hope you guys are ready, because here we go. So obviously, there's a lot of big global crypto trends, and obviously, especially with a lot of my colleagues at PwC France, we talk a lot of these topics all the time. But really, what I want to focus today is on central bank digital currencies. So let me give you actually, first of all, maybe put my professor hat on for a second and just explain what is a central bank digital currency. A central bank digital currency is really a digital form of central bank money that is issued by the central bank and that is part of the monetary base of the economy. And you may say, wait a second, but I have digital money all the time. Every time I use any of my apps in Europe, in North America, in Asia, I'm using digital money. Well, you may be using digital money, but you're not using central bank money. And this is quite important to understand when we think about central bank digital currencies, is today there's only two kinds of central bank money. One is digital physical banknotes that you hold, that you can touch, and that you know are a liability towards your central bank. And second are the reserves that your bank, whatever lovely bank you have, holds at the central bank. Literally, the amount that you have of money, the cash that you have in your bank account, as lovely as it is not central bank money. And actually, that's why it's actually basically debits and credits, or if you want pluses and minus, on the accounting books of that bank. And what's really exciting with CBDCs is that for the first time, we're going to have a third form of central bank money, a digital form of currency, kind of a digital kind of banknote. And that's super exciting. And that's something I think our generation is very lucky that we have the chance not only to see it, but potentially also shape how this is going to take place. And obviously, this has drawn a lot of attention, a lot of discussion from central bankers, from policymakers. And there's been obviously a lot of very practical activity over the last couple of months as well. For example, today, 80% of central banks are conducting some kind of research or pilots or experimentation on a central bank topic. But you may say, wow, this is pretty crazy. I didn't know this was the case, and you're right, because actually until very recently, a lot of central banks were opposed to the topic. For example, in 2018, the Bank for International Settlements, kind of the central bank, a club of central banks, actually said, you know what, decentralized technology of cryptocurrencies is a poor substitute for the solid institutional backing of money. We don't need this. And obviously even the ECB came up and said, you know what, that there's actually, the problem is if we put in a CBDC, it can create a lot of headaches. It can actually bring in, there's a risk of actually can accelerate the run on the banks. And I'll talk about that even more. However, what we realize is over time, the central banks have realized there's a lot of benefits to central bank digital currencies. For example, one thing, it gives us better visibility of the the impact of some of the monetary policy that is put in place. For example, today, if everybody is using cash, like, by the way, it's the case in many parts of Europe, including Greece, Italy, and others, for policymakers, it's very difficult to see what is actually the economic activity in a certain country or region or the impact of a policy. Second, of course, if you want to run a business, you don't want to pay tax, you want to stay under the radar of tax authorities or government, cash is still the best way. And that's why actually one of the potential we have with CBDC is to be able to actually put a dent or at least combat the black economy and tax evasion. And there's many other benefits. One of them that is very close to my heart is actually the CBDCs gives us, for the first time in a very long time, the fighting chance against money laundering. Again, today, despite all the billions of dollars spent every year, according to policymakers, the amount of money laundered in the system is still between around 5 to 7% of global GDP. And that's crazy. And actually, despite all the money that is spent on combating this one of these big problems we have around the world, we're still able to capture less than 1 to 2% of launder transactions. And CBDCs, for the first time, give us potentially a fighting chance because we're able to see the transactions going on and potentially stop the layering activity and all the money laundering that takes place. Again, corruption will always exist. People will still give each other gifts, put their kids into other schools, and so on and so forth. But at least from a banknote perspective, cash perspective, it can give us a fighting chance. And maybe another one actually that is very exciting as well is actually that we give us a chance to embed monetary policy within the currency. Today, if I want to embed an interest rate on banknotes, I'm not able to. And this is why a lot of central banks, as they print money, what they do actually in practice is they buy a lot of the assets in the market. And actually, that is only a direct way to actually having an impact on interest rates and other impact from a monetary perspective that we can have on a country or on a economic region. And actually, what's the benefit with actually CBDCs? It gives us for the first time the chance to potentially embed some of these monetary policy tools within the currency. So very exciting. But all these were great. They're great for academic conferences. Were great for people like me writing books. But really, there was not much things. The things were not moving that fast. Until, of course, the bombshell happened in the crypto space. Libra was announced in June 2019. That really catalyzed this topic on top of the agenda. Many people got involved, even those who were not before and very interested in the topic, like Donald Trump, who started tweeting about it and saying, no, this is not a good thing. And actually, the US dollar will always remain the strong currency. Other politicians got involved. In the Congress, the letters were sent to every company that was actually becoming a member of the Libra Association, as it was called at the time, saying that if they continue to get involved with Libra, they'll be investigated not only for their Libra activities, but for all their payment activities. And rightly so, a lot of concerns came up from policymakers around the world trying to look at what is the impact if a global currency or a CBDC, or what could be the impact, and actually what can be the reaction that central bankers and policymakers can take. But rightly so, a lot of policymakers had a lot of concerns. For example, one of the big risks that was raised is in the event that global stablecoin are used on a very common basis, it may create a risk of currency substitution. Countries that are not a G7, G10, or G20 country, a lot of people may prefer to use these big global stablecoin currencies and rather than use their own home currency. And many regards as well, many saw that this could also create some risk to financial stability. Of course, when you're dealing with currencies, with a banking system, it's very easy to control. But when we're moving to stable coins and CBDCs, stable coins potentially not as easy. But also banking funding. And this is, I think, something that is very important to understand from a CBDC perspective. Today, let's say if I don't trust the banks at all, the banking system, I can try to go to my ATM, withdraw as much as cash that I can, try to bring it safely to my home, my office, my safe, wherever I want to put it. But there's actually physical limitations to how much you can withdraw from an ATM and also how you can physically store it. And actually, this is one thing that a lot of banks have realized and policymakers, in the event of a financial crisis, when people don't trust the banking system anymore, if they can easily move the money to actually a digital central bank digital currency, it may accelerate a run on the banks. And this is a topic that has been discussed very frequently. Even this week in The Economist, there's an article that talks about this specific topic. So a lot of concerns by policymakers and really saying, okay, what is the reaction that central banks can have on this topic? Another interesting thing that happened after Libra, another big bombshell, was, of course, COVID-19. Where during COVID, a lot of discussions came in. This is a great report, for example, from the Bank of International Settlements, saying that actually people were worried whether using banknotes can transmit the virus. The other ironic thing that happened at the same time, while the usage of banknotes for payments was going down, hoarding of cash was going up. And across every region of the world, including in the EU, and there's great reports from the ECB on this, actually people have started keeping cash with them just because the situation was unstable, although they were using it less and less for payments. And by the way, this is a phenomenon you see a lot of times whenever there's a crisis situation. This is something you're seeing in places like Hong Kong, where I'm based right now, to the US and other parts of the world, including the UK, where the FCA just released a report on this exact topic as well. A part of actually the reduction of cash in payments and people hoarding cash, another problem we realized is actually delivering a stimulus payment to people was very difficult. Of course, if you're actually, is there something else that we can do that would accelerate this and make it easier for governments to deliver money to the public? And this all came out in the broader conversation that we've been having on central bank digital currencies. And let me actually come up to really some of the practical elements now. Really, again, if I put my professor hat on for a second, there's really two types of central bank digital currency that are being discussed right now in the market. First is wholesale CBDC, which is a central bank digital currency between the central bank and its various member banks. Second is retail CBDC, that is actually between the central bank and potentially the end public, all of you watching this at home. And what's really interesting is while a wholesale CBDC, you as a public, you will not interact with it, you will definitely interact with a retail CBDC. And there's been obviously a lot of discussions, academic papers, policymakers, experimentation from central banks on this topic. And there's been numerous approaches being taken to it. For example, some of them have been focusing initially at the national level, trying to see whether we can use CBDCs within a certain country. And actually the reality is, though, when you look at a certain country, within a country, at the national level, payment systems may not be perfect, but they work okay. Many countries right now have what we call RTGS systems, real-time gross settlements, and faster payment systems that make that within a certain countries, the payment systems are operating quite well. The problem arrives when you go to the second vertical that I have here, which is cross-border payments. Today, and we'll talk about it in a second, it is still a big issue. And this is why there's been numerous experiments. For example, one of them that I've been following very closely is what's been happening between the Hong Kong Monetary Authority, the Central Bank of Hong Kong, and that of Thailand, where they've been trying, in order to reduce cross-border fees, especially when it comes to correspondent banking, come up with a regime where they can have this like corridor where you go to the central bank and you give, as a bank, can go give them their central bank money, and in exchange get actually kind of a digital currency that can be used to transmit between this virtual corridor with other banks of the other country. So very exciting development going on this perspective when it comes to wholesale CBDC. Again, this is great for the financial institutions. It's great actually for the banking system because it helps us reduce cross-border fees, especially when it comes to correspondent banking. But as a member of the public, you do not really feel this. You don't really see it. But when it moved to retail CBDC, this is where there's a lot of activity. And I can tell you in 2021, this is where you need to pay a very special attention because there's a lot of developments going on. And there's different kinds of retail CBDC. For example, one of them is what we call the two-tier system, which is the model that many countries around the world, from China to the Bahamas, the Eastern Caribbean to even Sweden, have been recently experimenting with. Where basically what happens in this model, you have the central bank and the traditional banks still play a role in when we come in the issuance of this currency. They're kind of the intermediary that is acting between the central bank and basically the public. It's very similar ways as right now that things operate today. But there's been different models that have been explored. One of them is the IMF that came up with this model that actually where the CBDC is issued by potentially non-bank fintechs, but however, where 100% of the liabilities are covered by reserves at the central bank. There's a big debate here, if I put my academic hat on, in between policy circles on whether this is even a CBDC in the first place. And actually, this is something that BIS has made very clear in one of their recent papers, saying that they do not see this model as even a CBDC and it should be disregarded. But I think even there, I think it'd be useful for you just to share with you so at least you're aware that this is part of the conversation. And this is very similar to debates we've had a couple of years ago in the US when we discussed the topic of narrow banking. And there's obviously a third form of model, which is one event, for example, here with the Bank of England has done a great job putting forward, which I call the platform model, which is really where the central bank kind of puts in place the infrastructure, the architecture that allows not only financial institutions, but non-bank fintechs to potentially interact and actually be able to be involved in the CBDC ecosystem. And there's many, many different approaches to this. And there's also different ways you can present it. But I think these are all very relevant ways to showcase how retail CBDC is being presented. And also, I think it's one other important discussion that is taking place is as we're designing the future of money, do we look at a token-based or account-based? You may ask, what is the difference? So here we go. A token-based is really kind of a digital form of money, of issuance, that is like a prepaid or that can be stored. You can actually hold it. It's a bit like a bearer instrument. Whoever holds that token-based asset actually owns it. And this is not very dissimilar to, for example, gift cards or actually a banknote. You can look at this banknote, you have it. If you know it's not a fake, it actually belongs to the owner. The problem with this, obviously, it increases the risk of money laundering. and actually any other nefarious activity, because it's very difficult to trace. The other approach has been what we call account-based, where it's been issued very similar to a bank account today. That is actually a platform that is kind of a bit more centralized, that is able to be the kind of the ledger from that perspective. Of course, the benefit for this is the downside for this is it does not easily work offline, and it's not even very clear that it can achieve the goal of financial inclusion. The reality is, whatever CBDC is being designed will probably have features of both. Very similar to today, when you have a banknote, you can have it in token-based format, but you can also have the bank account. So actually, the way actually CBDCs will probably be designed is have a features of both. But there's different other methodologies as well. I mean, when we're talking before about wholesale and retail, there's even some countries like, the Marshall Islands have been looking at decentralized central bank digital currencies. So there's a lot of discussions going on around the world. But I think the definitions, it's very important that when we talk about the latest trends, we think about some of these topics going on. Which brings me again, as closing, I have less than about 3-4 minutes left, is really what do you need to watch over the coming months as it relates to central bank digital currencies? For sure, 2021 was a big year for actually CBDCs. I'm actually releasing tomorrow my predictions for 2021. I can give you as a scoop, not surprisingly, CBDCs will be a big topic for the months ahead. For example, one of the areas you need to keep an eye on for sure is what's happening in China. China, as we know from a fintech perspective, is years ahead of everybody else. When it comes to the future of money, China is still leaps and bounds in front of others. And obviously, they have been looking at this very closely. China has been exploring the digital yuan, their CBDC, since 2014. So think about many countries that have been starting the experimentation this year. China has been looking at this for many years. They recently launched a pilot that is officially being confirmed, and they've actually launched this whole initiative that goes into 4 big cities in China, in Shenzhen, Shanghai, Chengdu, and Suzhou, and really with the goal of eliminating what we call M0, paper bank notes and coins. And China has been moving on this very, very, very fast. I mean, just to put things in perspective, in the first phase of the pilot, let me remind you, this is a pilot. They've done over 2 billion renminbi transactions. That's about $300 million US, and they've explored over 12,000 use cases. So very, very exciting developments going on from that perspective. And they've done over 4 million transactions. So really, China, a lot of activity in 2021. You need to keep an eye on China, especially to look at where potentially the future of money is being developed. And they've even done some innovative tools. For example, a couple of weeks ago, they launched a lottery where they try to put digital currency in the hands of public, where actually 50,000 residents of the city of Shenzhen, which is kind of the Silicon Valley of China, receive each the equivalent of $30 that they could use in actually certain stores in Shenzhen. So one thing to watch for next year, what's happening in China. Second, actually, what's happening with DM, the recently renamed Libra Association. Obviously, since it's been changed a couple of times. Libra 1.0 went to Libra 2.0, where it was becoming more of a stable coin, getting regulated by FINMA, and actually with the goal of very purposely potentially integrating with central bank digital currencies down the line. And actually, what's going to be very interesting is with the goal of Libra or DM to make money, sharing money, sending money around the world as easy as sending SMS or WhatsApp message or an email. This is pretty much game changing. And you look at it from that perspective, it has a big role to play. So definitely a big area to watch. David Marcus today from Novi, which is the Facebook wallet, just announced at the Singapore FinTech Festival that actually they were looking at launching this next year. And obviously there's a lot of talk about them launching over the next year as well in the public domain. Another big area to keep an eye on when it comes to CBDCs is what's happening with stablecoins. You'll say, yeah, but stablecoin is different. I would argue it's actually quite relevant because actually the development we're going to see in stablecoin may have a positive effect on CBDCs. So stablecoin is obviously a digital currency that is backed 1-to-1 by fiat currency. And obviously the volumes of stablecoins have been growing tremendously over the last couple of months. It was less than 5 billion a couple of months ago, before at the beginning of the year. And now we're over 20 billion, almost hitting 25 billion right now. And this matters because actually stablecoins, a digital currency backed 1-to-1 by fiat money, allows you to send money around the world, cross-border, instantaneously, 24/7, with almost no fees. So this is actually a big deal for actually when it comes to the future of money. And this also accelerates, kind of gives a kick in the back to CBDCs, because as more and more people are using stable coins, it actually encourages the industry, the CBDCs, to move faster. And the big area of benefit of this is going to be the international remittance sector. Today, the average fee of sending money around the world is 7%. That is the average, by the way. And there's over 550 billion sent a year by 250 million migrants. So really a big area to watch. Again, a lot of people will benefit from this. Unfortunately, again, the people paying the most right now are often the people who can afford it the least. And finally, my time is up. So I'm going to finish it up with you with what's one thing you should also keep an eye on is what's happening with payment firms. You know, for example, in the US right now, a big development is going on with PayPal that last week took out the waiting list for its US customers. As of next year, it's going to go global. 250 million people will be able to use it. But again, this is really making it easier for people to get exposed to digital currencies. And as they get comfortable in tools that they are familiar with, to experiment with Bitcoin, with ETH, and buy different cryptocurrencies, and they get more familiar with the asset. This, again, makes them more comfortable with the idea of CBDCs. So really, 2021 is a big year to watch when it comes to central bank digital currencies. Again, keep an eye on what's happening in Asia and China and some of the different initiatives going on, especially, by the way, in France as well, where there's a lot of very impressive work being done from the Banque de France when it comes to central bank digital currencies. A very, very exciting topic and very exciting developments going on from that perspective. Okay, merci beaucoup. C'était un plaisir. It's a pleasure to be with you all today. Thank you for letting me the time so I have the chance, the opportunity to share our passion of the future of finance and money with you all. I look forward to being back in Paris with you all, hopefully in person next year. Merci beaucoup et j'espère à la prochaine à Paris. Merci beaucoup.